Zillow just published their 2025 housing market report, and they believe buying a house is going to get easier in 2025. Take a look. More inventory should shake loose in 2025, giving buyers a bit more room to breathe. This is interesting because Zillow is now contradicting one of their competitors, Redfin, who says that 2025 is going to become a renter's market. Zillow, on the other hand, says it's going to become harder to rent, so more people will buy. Now, I already did a full deep dive on Redfin's 2025 report. If you haven't seen that video, I'll link it for you down in the description. But in this video, I want to break down Zillow's 2025 housing market report. That way you can get a full 360 view of what potentially could be coming in 2025. And of course, if you want to read the report for yourself, I linked it for you down in the description. There are three main themes that I got out of this report. Number one, Zillow says the housing prices are going to go up in 2025. Number two, Zillow says that renting is going to become even more expensive in 2025, which is going to make buying more attractive. And number three, Zillow says that people are going to change their preferences of what types of homes they're going to buy because we're seeing more people buy smaller homes. So let's break this all down. Now, first, I want to remind you that on January 7th, 2025, I'm hosting a free and live and virtual wealth building workshop where I'm going to be going over how you can accelerate your wealth in 2025. More specifically, I'm going to be going over how you can build an investing strategy for yourself. Then I'm going to show you how you can find unique investment opportunities because 2025 is going to be an interesting year. And then I'm going to show you how you can actually research those opportunities. That way you can be a smarter investor. It's completely free, but we do have a limited number of seats available. I'm hosting two workshops on January 7th, one in the morning at 10:30 a.m. Eastern Standard Time, and then again in the evening at 8 p.m. Eastern Standard Time. So if you'd like to join, you have to register, and I have the link for you to register down in the description below. Starting with home prices. Zillow says that home prices will grow by 2.6% in 2025, and assuming the interest rates will stay around 6.5%, that more sellers will list their homes for sale. So Zillow believes that we will see a slight price growth in houses in 2025. But despite the price growth, they believe that buying a house is going to become more affordable. Why? Because number one, they're expecting inventory of homes available for sale to rise, and they're also expecting mortgage rates to fall. So let's dig a little bit deeper. Zillow forecasts 4.3 million sales of existing homes in 2025, up slightly from the 4 million expected in 2024. So what Zillow is saying is they're expecting more people to sell their houses in 2025. And you'll start to see how both of these tie into one another because number one, they're predicting more sales of houses, but also if mortgage rates fall, that will contribute to more people selling their houses. Because according to Zillow, about 45% of homeowners today have a mortgage rate under 5%. And so the problem is if you own your home and you have a 3% mortgage rate, if you sold your home today, you'd have to go to a 7% mortgage rate, and that's a big hike, which is why a lot of people are saying, I don't want to sell, I just want to stay in my home for longer. And what Zillow is saying is two things will happen. Number one, people that are sitting in their homes are saying, eventually I got to sell my home. And maybe that'll start happening in 2025. And they're also hoping that mortgage rates will fall in 2025, which will help these people who have a sub 5% mortgage to consider selling their house. Now, when it comes to mortgage rates, this is what Zillow has to say. Our best educated guess is that mortgage rates will be lower by the end of 2025 than they will be at the start of the year, with the possibility of volatility in between. Now, I'm just a random guy on YouTube, but what that sounds like to me is we have no idea where mortgage rates are going to go, but we, Zillow, are hoping the mortgage rates will fall. That's what it sounds like. Now, there's a lot of factors that can impact mortgage rates, but what I want you to understand is that on December 18th, which was the Federal Reserve Bank's last meeting, they said that they're going to cut interest rates by 0.25%, and that they're going to cut interest rates less aggressively in 2025. And when that happened, mortgage rates actually went up, not down. And you might be wondering, well, why are mortgage rates going up despite the fact that the Federal Reserve Bank cut interest rates? And that's because there's a lot of factors that impact mortgage rates. One factor is what the Federal Reserve Bank does, which is the central bank of the United States. But the other factor is also the concern that investors have about the economy. Because as treasury yields go up, mortgage rates generally go up, and treasury yields go up when investors are concerned about the economy. So when the Federal Reserve Bank says we're still concerned about inflation, which is what they said on December 18th, when they say that we're going to cut interest rates less aggressively, which is what they said on December 18th, investors got concerned, treasury yields went up, and mortgage rates went up, despite the fact that the Federal Reserve Bank cut interest rates. That's why it's very hard to predict what mortgage rates are going to do in 2025. And Zillow's kind of saying, we're hoping mortgage rates will fall by the end of 2025, but we really have no idea, and they're expecting volatility. But what we do know is that if mortgage rates do fall, that could incentivize these homeowners who have low mortgage rates to potentially sell their houses, which could increase inventory. Now, while I do think you need to be careful with any financial opinion that you listen to, including a random guy on YouTube, I do think that Zillow is a great place to study the financial data because they have a lot of real-time data as to what's happening in the housing market. And here's what they're saying is going to be one of the hottest markets in 2025. Zillow's predictions for the hottest markets in 2025 are Hartford, Connecticut, Providence, Rhode Island, Miami, Florida, Charlotte, South Carolina, and Indianapolis, Indiana. And let's contrast those with the cities that Zillow says are going to be hit the hardest. New Orleans, Louisiana, San Francisco, California, Austin, Texas, Sacramento, California, and Minneapolis, Minnesota. In other words, it seems like Zillow believes that the southwestern part of the United States is going to become more of a buyer's market. But along with that, they also believe that renting is going to become more difficult in 2025. Zillow says renting deals are going to become less common in 2025. Renters were able to claim all sorts of concessions in 2024 when new multifamily rental construction hit a 50-year high. The sizzling building boom is expected to drop off by the end of 2025. In other words, what Zillow was saying, we saw a ton of multifamily apartments get built in 2024. And these complexes wanted to incentivize people to move in, so they gave concessions, maybe free rent. But now that those buildings are starting to be completed and less multifamily buildings are being built, you might not see as many of those concessions come 2025 and 2026. Compared to 2024, new rental construction is expected to drop by 21% during the first half of 2025 and drop even further as the year progresses. Again, we don't know what's going to actually happen until it happens, but it's interesting to see how multifamily construction has changed and how it will be changing. But of course, things could always change in 2025, but that's something you definitely want to keep your eye on. And then Zillow threw an interesting curveball, and they said that Americans are going to want smaller homes in 2025. Here's what Zillow had to say. Americans will take it a notch down with smaller spaces, which is something we've been seeing across the country where new houses are just generally being built smaller. Now, the interesting part about this is just because houses are getting smaller doesn't necessarily mean they're getting cheaper. In fact, we've seen that the cost to build a house has gone up year after year after year, despite the fact that people are taking on less square feet. So just because you're smaller does not mean it's cheaper. After several years of living large, Americans appear ready to scale things back on the home front. This trend can be summed up in a single word: cozy. Now, the reason why many Americans are going to smaller houses as opposed to bigger houses today is because, of course, it's cheaper to buy a smaller house than a bigger house. But houses over the last 10 to 15 years have become smaller and smaller, but the smaller houses today are more expensive per square foot than they were years ago. So we're seeing Americans move to smaller houses because it's cheaper to buy a smaller house than a bigger house, but the smaller houses are still a lot more expensive than what they used to be. Now, this is where I want to remind you one more time that if you're thinking about buying a house, you have to understand what this house is. And one of the things I like to tell people is think of your house like buying a liability. Many people will tell you that the house that you live in, your home, is an asset. It is the biggest investment that you're ever going to make. And this is a great tool to get you to buy a little bit bigger, a little bit nicer, which is great for your realtor who gets a bigger commission check. It's great for your banker who gets a bigger commission check. But at the end of the day, no wealthy person has ever talked about how they became wealthy because they bought a house. And if you can pay it off, great. But you still have property taxes and insurance payments and your maintenance costs and your upkeep and everything else to own that house. Now, I'm not against you buying a house. In fact, I think it's a very good thing for you to buy a house, but I don't want you to buy a house that you can't afford. And so now when you have a lot of people confused as to what's going to happen in the housing market in 2025, everybody's trying to figure out what to do. The key thing that I want you to remember is not to try to time the market, but rather make sure you can afford the house that you can buy. I'm not saying that's going to happen, but if we do see a housing market crash, no big deal if you can afford the payments. And this is where the problem lies when people buy a house they can't afford. Then you see an economic slowdown. People realize they can't afford the monthly payment. And now you have no skin in the game because you put no equity into the house, you put no down payment. That's when you start to see the foreclosures. So you want to be in a situation where you can win no matter what. And that means living in a house to make great memories and not have to stress about the payments. That's the key to being a successful homeowner. Buy a house that you can afford. What does it mean to afford a house? Number one, afford the down payment. Have at least 20% to put down on a house. It is not easy, but if you don't have the money for a down payment, you cannot afford the house. Number two, afford the monthly mortgage payment. Now, there's a lot of rules that you can follow on what you can afford for a monthly down payment or not. What I'd like to talk about is very simple. 75, 15, 10. What this says is for every dollar that you earn, 75 cents is the maximum that you can spend. This includes your mortgage payment, this includes your food, this includes your groceries, this includes your entertainment. 15 cents for every dollar that you earn is the minimum you invest, not in your mortgage, into things like stocks or rental properties. And 10 cents is the minimum that you save. Which means if you can live off of 75% of your income and pay your mortgage and housing costs within the 75% of your income, you can afford the monthly mortgage costs. If you can't afford the house. And number 3, you have to be able to afford the move-in costs, which is, well, if you want to move into a new house, you might need movers. You might need new furniture. You might want to upgrade the basement or the bathrooms. Factor that cost in there. It is crazy how many times people forget how expensive it is to move into a new house, because as soon as you move in, you or your wife say, we need to get a new sofa. And let me tell you, sofas are expensive. My wife and I bought a new sofa, and wow, they are expensive. The sofa that we bought cost around $5,000, and it wasn't even a fancy sofa. It was just a regular sofa, and I couldn't believe that these sofas are now $5,000. You want to get movers? They're expensive. You want to upgrade the kitchen? Labor is expensive. Materials are expensive. Factor that cost in there. You do not want to go into this new house and then have to start financing how you're going to upgrade the kitchen. But if you can afford to live in the house within your budget and still have money to invest, still have money to put in the stock market, still have money to buy rental property, still have money to put into your business or whatever your investments are, good. And you still want to have money to save. Now, when I say money to save, this is saving money for an emergency. If you can do that, then go out and buy a house. Don't worry about the economy. Don't worry about what's happening in the markets. Let them do their thing. Let the markets boom or crash. It does not matter. You can buy a house that you can afford, and now you can just ignore all the other noise. See, a lot of people are trying to buy a house as a way to make money. They want to time the housing market. When your house is a way for you to build memories, it's not a way for you to make money. Now, can you make you money? Great. If it makes you money, amazing. But if it doesn't, oh well. You're buying the house for memories. You're not buying the house to make money. I look at the house like I buy a shirt. My shirt is a liability. I'm not saying I'm not going to buy it, but I'm not going to worry so much about the price. I'm going to worry more about, can I afford it? Now, of course, I'm not somebody who's just going to buy whatever. I'm going to price shop. But the most important thing when I go out and buy a shirt is, can I afford it and can I like it? When I can do that, then I will consider buying it. It's the same thing with your house. Want to buy a house? Great. Can you afford it? Do you like it? Yes or no? If no, then continue renting, get your money in order, and then build up your down payment, build up your income, that we can actually go out and afford the home that you want to buy. And again, this is where your financial education is so important, and that's why on January 7th, I'm hosting a free workshop on how you can build and accelerate your wealth in 2025. So if you haven't registered yet, I would love for you to join, and the link is for you down in the description. Redfin just published a new housing market report where they said America will become a renter nation in 2025. They believe houses are going to get more expensive in 2025. And number 2, they believe the mortgage rates will stay high at around 7% through 2025. These two things will make buying a house less affordable,